Well, I'd like to thank everybody for coming to the webinar, finishing the fourth quarter strong. It's 2 o'clock. Looks like we've got quite a few people here so far. So I'm going to go ahead and start. Today we've got Kathryn Wilson here from Supporting Strategies. They're a strategic partner of ours. And my name is Jeremy Doorn, obviously not Christian. For those of you that know Christian, I'm definitely not him. And we're just going to kind of talk about things to look for while we're finishing the end of the year. I'm going to talk about some tax ideas to look for at the end of the year, and Kathryn's going to talk about some other stuff. So I'm going to let Kathryn go ahead and go for it, Kathryn.
Okay, great. I have a few thoughts that I put together thinking about how we're going to close out 2021, what a very odd year that we had this year, and thinking about 2022 and keeping with the theme of being the fourth quarter and with it being football season and all of that. I thought I would connect some of these items to check off our list with football terms. But the first one being that we need to check our uniform, in so much that how are our businesses registered? And if you're a sole proprietorship, is it time to look at setting up an LLC? Or if you're an LLC, do you need to look at maybe changing over to be an S Corp or something like that? Just take a solid look. And this falls under tax planning too. But you want to talk to your tax advisor and make sure that you're set up the way that you need to be set up. And then thinking about reviewing this year, reviewing your past plays, you want to see what strategies are working and what are not working. And you want to start with your financial statements, looking for errors in your financial statements, but also checking your general ledger. You want to look at how your revenue and expenses lined up against expectations. If you set goals, did you meet your goals? You also want to maybe run a P&L, which is a profit and loss statement, or a revenue expense by month, and look for consistency. For example, did a bill accidentally get paid twice? Are there expected bills? Like, were you expecting to pay? Do you normally pay insurance in September and then you didn't get the September bill? You might need to check on that. So just looking at all of your bills, your revenue, your expenses, and see if they line up the way that you were expecting it to. And then also, it's a great time to review all of your receivables and take a solid look at your receivables, and if you need to collect on anything or if it's time to write off some bad debt. And then third, it's time to, the end of the year is a great time to reward your team. And there's a lot of factors involved with rewarding your team. And one of those is checking for injuries. That's another pun, sorry, another football analogy, but we want to look for solid information on your W-9s and your W-4s. Did you have any employees move? Did somebody have a baby? Do they need to change their withholding amount? We also want to make sure that all of your contractors have W-9s and that you've or their insurance certification as well. And it's also a time to think about if you want to change your payroll providers for 2022, just thinking about how you are currently paying your employees and your contractors and how you want to do it moving forward. And the end of the year is a great time to say thank you to your staff, to really take a look at your employees and your contractors, maybe write a thank you note. Of course, a lot of employees are thinking about Christmas bonuses. Do you want to do year-end incentives? I mean, how do you want to thank your employees and your contractors this year? And also, it's a time to think about if you want to send out a Christmas gift for your clients as well. But when you're thinking about employees, it's a good time, especially if you're growing and getting bigger. Do you need to relook at or set up new employment agreements with your team, or maybe even create an employment handbook? So those are things that small businesses sometimes bypass and don't have in their arsenal. But as you grow, it becomes more and more important. So, and then lastly, for employment and employees, at the end of the year is a great time to review all your benefit plans and think about any changes that you want to do for next year. Like, do you want to change your health insurance, or do you want to add a simple IRA or a 401k, just to analyze all of those things. And so thinking a little bit more about the end of the year, it's time to conduct an inventory. Even if you're a small business and it's just you, it's a perfect time to really take stock of what you've got. Do you ship products? Do you need to just track all, put together all of your shipping materials in one place? Count what you've got. Do you need to, if you're selling products, you want to take a really solid inventory and turn that information in for your taxes too. Jeremy may hit on that as well. So I don't mean to take away any of his thunder there, but when you're thinking about your inventory and you're thinking about your sales, it's a good time to think about your revenue per item. If you have an item that sells really well, but you don't make any money on it, do you want to keep selling that item next year? Or if you have a service that it doesn't cost you very much to perform and everybody wants it, how do you market that service, to more people? And lastly, my thoughts are thinking ahead to your goals and looking ahead to next season. I'm pretty sure, Jeremy, that most of your listeners know about setting SMART goals, but for anybody who's not ever heard of that before, SMART goals are S for specific, M for measurable, A for achievable, R for relevant, and T for timely. And when you're setting those goals, you can look at all different areas of your business that you're planning for next year, starting with the revenue goals. What do you expect to make every month? And really, I'm telling everybody right now to take a hard look at whether or not you need to raise your prices. Employment costs have gone up. Costs of shipping, costs of materials have gone up. Is it time to raise your prices? And, I've seen pretty much across the board with most of the clients I'm working with, 5 to 10% at least price increases.
Can I step in there and say,
yeah, sure.
Yes, it's the right time to raise your prices.
Yeah,
the labor market's not getting any cheaper,
Right. And it's we see it in everything. And I'm sure your businesses see it too. Everything costs more. So everybody's doing it. That doesn't mean it's, it's not great, but it is the way it is. And it's expected right now. If you've ever been just thinking about raising your prices, now's the time to do it. And I'm thinking about your goals, not just, sometimes this seems a little silly, but it's also very helpful if you not only think about what your revenue goals are for 2022, but look ahead and think, what is your real revenue goal for 5 years from now and maybe 10 years from now? And you can just tuck it away in a folder somewhere, and, but just knowing that you've thought about that really does help as you think about the things that you want to do next year, because you are working ahead, not just 1 year, but 5 or 10 years down the road. And then we talked about labor and staffing needs. Are you expecting some people to leave? Are you going to have to hire more people? Are you going to need to buy more space? Are you going to need to renew some business licenses? And then it's a really good time to make a budget. If you've never made a budget, setting a budget for 2022 is a great goal to do. And actually, it doesn't have to be every single line item, but it can be simple. Just how much do you expect each month, and how much do you expect to spend each month, and then what you think what your profit will be, and set some budgets on especially on your expenses. And then on another note, the end of the year, nobody's going to be surprised that it's a good time to audit your website and all of your social media accounts, and also organize your work and office space. Get it organized, start fresh, and, get ready for the new year. So those are my key thoughts.
Well, those are all great thoughts. And I'm going to go from her kind of planning for 2022 and seeing what's going to happen for next year and setting goals, and kind of looking at the fourth quarter as far as tax planning goes, and how all of those things can affect what we might do here in the fourth quarter, depending on what we're going to have going on next year and stuff. So some of the stuff I wanted to cover was, first, we're going to remind everybody, if you do have employees and you've been down in income for any quarter compared to 2019, there we have a whole webinar on it, but just reminding people that the employee retention credit can be very lucrative for those that do qualify. There obviously are different qualifications to qualify, but the credits can be pretty large. And we do have, I think it's 3 years to file, what are they called? Amended 941s, because that's where you would claim the credit. And so that's always a good place to start to actually look at some of that data. The other thing that I've seen last year that people were running into that might run into this year is if your sales are down and you're running losses, that PPP loan that you might have gotten that you have on the books, if you're an S Corp and you're running a loss, you might run into some loss basis issues that you can't take the loss because you don't have any basis. But that PPP loan forgiveness actually will create basis and allow you to take that loss currently so that you don't have to carry it on to the next year. Ran into a couple of issues with that last year. So that's one thing to be looking at, is if you haven't had your PPP loan forgiven or filled out the application, that's always an important thing to do, especially when it comes to taxes. The other thing to look at is retirement plans. Retirement plans can save a lot on taxes, whether that's starting them in 2022, or if you're a sole proprietor or just a single member S Corp, you can start a solo 401k, but you can start that anytime up till you file your tax return next year. So you can actually do that after the fact. But if you had a simple plan now and you were wanting to transition to something like a 401k plan for next year, you'd have to you have to have the simple you have to let everybody know that the simple's leaving as of November 1st, and then to transition for January 1st, because you can't have a simple and a 401k in the same year. So if that's something you were planning on doing, that's something to wrap up here in the fourth quarter. Like Kathryn had talked about, the S Corp election for sole proprietors and LLCs is a big tax saver, and can be, especially if you're starting to make money. It can save a lot of self-employment tax. And then one other thing is asset purchases. I never tell anybody to go buy equipment just to buy equipment just for the tax write-off. You really need to be buying equipment that's actually going to be making you money. Yes, we can write it all off, but if you just go buy equipment to buy equipment, you're going to have a bunch of equipment, save some tax now, but you're just going to end up having tax bills later and be paying, if you're financing that stuff, you're going to end up paying for that equipment later and not have the cash while you're making money and not getting expense for it. So the tax timing's not going to match up there with the cash. So you're going to fall into a pickle there. And some of this comes into play. Like, I have a client that I met with yesterday that has equipment, they're making money, but they're growing and they're buying equipment. And so they were asking me, we have a piece of equipment that we need, but we could get it next year, or should we get it this year? And so those kind of decisions can be made if we have good tax projections to see what's going on, right? Because they don't have a whole lot of income because they've got plenty of equipment to kind of depreciate this year. And so pushing that into next year when they feel like they're going to grow even more is probably a better idea, so we can get some of the tax expenses into next year. The other thing to think about for tax planning, and I know it's a big topic, and this is just some of the things that might come down, is some of the stuff that Congress and the government might pass as far as taxes going up. So taxes might go up in 2022. If the Biden administration has their way, then the tax rates will go up. They'll do away with some tax breaks and tax cuts, and so your taxes will go up. So if that does pass, pushing as much income into 2021 as you can would be a benefit. I don't know how much they're going to be able to get done, but all we can do is guess and speculate at this point. But just know if they do, taxes will go up, and there's some different things. They want to eliminate the capital gains tax rate, or raise it at least. They want to raise the corporate tax rate. get rid of some other things. And the other thing to look at is just trying to get a tax projection done. That's what we're in the middle of doing here at Core, is doing a tax projection to see what the rest of the year is going to look like, so that you can either get an estimated tax payment put in to kind of limit the big tax bill that you're going to have for next year, or at least start planning for what might be owed for next year now, and start sticking some of that money away so we don't run into tax issues next year. That's all I really have for end of year, the tax planning part of it. If there's, are there any questions? Let me see. I don't see any open questions.
I did think of something I could add on to your thought about setting aside money for tax savings.
Yeah.
I have a few clients now that one of the things that we've started doing is setting aside money monthly for, it's just a bonus tax savings is what we call it. And we didn't create a new bank account for that. But it's kind of like a savings account. We just set it aside inside of the QuickBooks Online file. And we moved the money, like a percentage of the previous month's revenue into that savings, and it adds up over the year. And that kind of, then it's not as big of a shock.
But you're not doing it into a separate bank account?
We're not. It's more just visual from looking at it in the QuickBooks, just so it doesn't look available when you're writing a check or something like that.
I mean, that's kind of like our Profit First stuff, where we're setting aside money for OpEx expense accounts, the owner's pay account, and then there is a tax account that you would set it up and put it into that tax account too. So those are all great options to start doing in 2022 as well.
Yeah.
To start sticking money away for taxes.
We've all been there with the big surprise.
Well, yeah. Well, and I think that's where the tax planning comes into play, is getting a big surprise, like owing a bunch of money is not a good thing, but also if you get a big refund, that's also not a very good thing for the most part, right? Like I had a client that was, when I had done his tax projection, he had just come on with us and he had been sticking piles and piles of money away for taxes, which is fine. But I came to show him that he was like $25,000 overpaid and didn't need to pay any more estimated taxes. And he was floored, and he was excited because he had been sticking that money away for taxes, but he really needed some money to spend on marketing to grow his business. And instead of waiting for that until after he got his taxes done the next year, we were able to put that money right into marketing and grow his business in the fourth quarter because that money was no longer needed for taxes. So it's really about planning. So you've got to know how much you're going to owe before you can start sticking that money away.
Sure.
Right?
Yeah.
That me? No. All right. Does anybody have any questions? Any thoughts?
No. Any football predictions?
As long as Alabama loses, we're good. They already lost. It's fine. All right. Well, with that, I will. I think this webinar will be posted on our website. And like I said, the Employer Retention Credit, there's another website to go get more information on that. And if you want to reach out to Kathryn, do you want to leave them your information?
Sure, I can put it in the chat.
Do that. Yeah, put it in the chat, and then if people want to contact you, they can do that. Do you want to tell people a little bit about what Supporting Strategies does?
Sure. So Supporting Strategies is an outsourced and virtual bookkeeping and controller service company. So we have team members who can help businesses do a little bit or a lot of their bookkeeping. And some of it's billing, like receivables, payables, month-end reconciliations, and payroll. And we can help with preparing budgets or filing sales tax returns, things like that.
Very cool. Do you guys do payroll as well?
We do. Well, we can run payroll, but we typically, we would use an outside payroll service. And we'll, we can work with whatever clients want to use.
So if you need internal bookkeeping help, they are the people to do it. And again, we're Core, and we can help you plan and help you grow your business profitably. If there's any questions, please reach out to us, coregroupus.com. And I hope everybody has a wonderful rest of their afternoon. And thank you for coming, Kathryn. I appreciate you being on here.
Yeah, sure. Thanks for having me. It's a pleasure.
Very good. I will stop the recording.